U.S. stock markets appear to be recovering this week following last week's sharp decline. Market worries for the U.S. seemingly intensified following the release of the U.S. employment data on Friday. In the European markets, we note that Volkswagen's woes appear to be ongoing, while on the side, the ECJ ruled against Google and Apple in their respective cases. We are to conclude the report with a technical analysis of U.S. 100's daily chart. The European Court of Justice ruled against Apple on Tuesday in regards to a decision by the European Commission in 2016 which claimed that the company received unlawful state aid from Ireland. In turn, the ECJ's ruling, which is final, will result in Apple having to pay a $14.4 billion tax bill due to the company receiving illegal tax benefits from Ireland. Moreover, the ECJ also dismissed an appeal lodged by Google and its parent company Alphabet against the company's €2.4 billion fine by the EU Commission in 2016, which claimed that Google abused its dominant position in online search by favoring its own price comparison shopping service over those of competitors. Overall, the two rulings against Apple and Google in their cases could weigh on each company's respective stock price. In other news, Apple had its Glow Time event on the 9th of September, where the company debuted the first generative AI iPhone. In the event, the company announced its Apple Intelligence software and showcased longer-lasting batteries. However, the main issue that we would like to point out is that Apple Intelligence will not be available in Europe, at least in the beginning due to the issues with the Eurozone's Digital Markets Act. Furthermore, per Reuters, Apple has failed to find a partner in China to help power its AI ambitions. In conclusion, the apparent hurdles for Apple Intelligence to launch worldwide could reduce the Apple sales of its iPhone, which according to Bloomberg accounted for 51.5% of the company's sales in the past 4 quarters. Thus, in our view, should Apple fail to implement a worldwide rollout of its Apple Intelligence, it could hurt the company's sales, thus may weigh on their stock price in the future. As a reminder, Volkswagen announced last week that it's considering closing plants in Germany for the first time in its 83-year history, which was then followed by a public outcry. Thus, with pressure mounting from IG Metall, the largest and strongest industrial union in Europe, Volkswagen's CEO has been forced to publicly defend his cost-cutting measures. In particular, Volkswagen CEO Blum stated per Reuters in an interview on Sunday that the pie has become smaller and we have more guests at the table. Moreover, the CEO went on to say that fewer cars are being sold in Europe, essentially implying that the possible closure of factories in Germany could be a part of cost-saving measures for the group. Nonetheless, the implications for a showdown between Volkswagen's management and IG Metall could spell disaster for the company. The US 100 appears to be currently testing our 18,830 resistance line, yet we maintain our bearish outlook for the index, and supporting our case is the RSI indicator below our chart, which currently registers a figure near 40, implying a bearish market sentiment. Moreover, we would like to point out the downwards moving trend line, which was incepted on the 22nd of August. For our bearish outlook to continue, we would require a break below the 17,900 support line, with the next possible target for the bears being the 17,000 support level. On the flip side, for a bullish outlook, we would require a clear break above the 18,830 resistance line, with the next possible target for the bulls being the 19,500 resistance level. Lastly, for a sideways bias, we would require the index to remain confined between the 17,900 support line and the 18,830 resistance level. Thank you for joining us today as we navigated through the dynamic world of financial news. From all of us here at IronFX, we wish you a solid trading.